Hello, everybody, and welcome to the Plus Three Futures and Commodities Show. My name is Ben Maldonado. As always, I'm here with my partner, Barry Hederachi. Barry, how we doing?
Doing great, doing great.
Yeah, we had a busy week.
Very
We are,
busy.
re- yeah, we are recording here Saturday morning, the 31st of January. The month of January is done, so that's 1 month in the books for 2026. When we
Right.
were reviewing, the theme we came up with was dinner is served. And Barry, guess what's for dinner?
Fake. It looks like it was fake.
It would be bull
You know?
steak if you want to be particular and specific.
hmm
It looks like the market chose. Now it's up to us to. But last week we talked about, right, there are signals and there's noise. There were certain signals that we pointed out to you that were pushing towards this probability. Well, now we have the evidence that okay, this is what the signals were, actual signals. And now it's a matter of, okay, how do we get positioned and trade this with good risk reward ratios? Because that's what it's all about, right?
Absolutely.
As Mark Douglas said, any trade could be a winner or a loser. You don't know. What you have to have is you have to take your signals and you have to have probabilities in your favor because you know over a series of trades you'll do well. So that is a beautiful looking picture of a direct hit on that 270 in the SPX.
hmm
So let's not
7,000.
delay. Yeah,
Yep.
let's jump in and let's go over the evidence and help people understand which way the probabilities favor.
Although it looks like 2 weeks ago, we're pretty much at the same place, A lot of things happen. A lot of churn in here. Now, the overall pattern, you guys, if this is your first show, I would recommend catching at least the last couple. That way, you can kind of see the build up, what we're doing here and the logic and how we were analyzing this. That said, the 7,000 was 270 degrees up from the April low. So it was a major resistance level. And I think we started calling the inflection points because this, when price reaches one of these levels, which is not that often because last time we had a major one was back in July and the midpoint was back in November. So, it's not that often, but this is a big one. And we were waiting to see, there were a lot of false sort of hopes up here and we were patiently waiting. First it was 7/8. We knocked it out and it had a nice correction coming off of that first, let's say the near hit. But 7/8 level is very important, as you can tell, because we came up the second time, lower high, went down again. Then we had a little bit of a false break, came back down. Then we looked like we were settling above, right, with a little bit of a retest, but that slipped. While all that was happening, we had this trend line drawn last week, and we talked about how the price came up and kissed it, and it was an inside bar. And our basic rule with inside bar is if one of the sides get taken out, that market tends to go in that direction. So you want to hop on that. And we didn't. Well, Monday rolls around and we didn't get it didn't break to the downside, but it broke to the upside. So when we look at the 30-minute chart, you guys will see it. Wasn't a big deal. It just didn't break to the downside. So sure, it broke to the upside. So then we followed through. Because of this big cycle expiration we had early part of January, these highs are still not taken. I mean, they're not really taken out, meaning we haven't settled above them. So one of the rules is that until price really settles above a cycle high, not just any old high, but a cycle high, you have to treat it with a little bit of care, especially in this situation, right, Ben? I mean, we have major resistance, square resistance right above, and we're doing all this nonsense below with a little bit of a gap. So a lot of space to fool around and like the market's been doing, it's been getting people on both sides. When the setup is like that, you have to be a little bit careful, especially because there's a gap between the old highs starting from the 7/8 all the way up, and last week we went up and tapped the exact number. What do you say, Ben? Isn't that
Um,
kind of
that's a good
um,
summary. I mean, what we kept saying, you and I, when we were talking during the week was, if you got a profit, grab it, right? If you hit resistance, sell it. If you hit support, buy it. But you have to be fast, otherwise, the profit gets taken away because of that chop that we were in.
absolutely. And because where the cycle high still hasn't been taken out. We have resistance here. The idea is, you want to sell the sell setups when you have it, but you want to cover it as soon as you can, at least cover your risk as soon as you can, and then wait to see what happens. And you can see last week was just back and forth, but you did well if you took the trades in that direction. Now, getting back to the trend line, we drew a trend line, so we talked about it, kiss of death here, which is what happens if the market is very weak. So clearly it wasn't very weak. I think we were waiting for FOMC, waiting for earnings. We were able to pump it up there, tagged it, and we reversed, tagged it on FOMC, and we reversed, dipped a little bit below the 7/8, this 69.09 level, but we managed to hang in there. Of course, we closed another Friday with the inside bar, so the rules stay the same. If we take out the low of the bar, the probability is that it's going to go lower, and if we take the high, well, it's probably going to go up higher and test this. Or at this point, why not just settle above and get this over with? When I'm running out of patience, basically because it's sideways. We're expanding, contracting, but kind of been in the same since late October, so it's getting a little old. All right, what things do we want to notice? We talked about how, yeah, we have cycles, yeah, we have triangles, yeah, we're having false breaks to either side. What's sort of the macro view of this last few months? What we're doing is we're still making higher lows, right? We have a low, higher low yet, and last week we put in another higher low so far. That'll count if we take out this high. In the meantime, we're also putting in higher highs. Of course, they're not really reaching up very far. If you go from high to high, it's getting, momentum's really starting to weaken. So keep that in mind. And the lows are getting very spiky. As soon as we get a drop, buying comes in. But as soon as we get a selling comes in. Both sides are very active, so it feels more like a washing machine than anything else. And I was telling Ben the other day that even though we're making higher highs and higher lows, it has a feel of it looks like churning, right? But it has a feel of distribution. So that's something we want to keep in mind for the long haul if we can't get out of this, or the gravity of this pattern. So
Yeah, like someone's holding it up until they're finished.
yeah, well,
And
that
then
could be
they'll let go of the rope when they're done selling.
right. And the money it takes to move this is around somewhere, right? And the money that's being taken from taking profits up here or selling. So all that is still in the system, but it's just not here. Would that be another way to layman's way to explain that?
Sure.
Yeah.
Sure.
Altogether.
Yep. Yeah.
All right. So for next week, what's the story? Well, watch the inside bar. 69.09 is the key to watch on the downside. On the upside, obviously, we want to settle above 7,000. When we say settle above, we mean it needs to settle above in order for momentum to pick up and for us to have even a halfway decent trend, the upside. Otherwise, sure, we can be up here, but the risk of slipping is much higher, mainly because the cycle high hasn't been really convincingly taken out. And for now, what we really have is a false break, clean false break. And we had a fast move coming out of that false break. So we ought to keep an eye on that.
Yeah, it gives you confirmation that is a genuine false
Yeah,
break.
it's definitely leaning in that direction.
Hmm.
So watch the rallies. I'll be fading the rallies until that high gets taken out. But like we said, it's very volatile in here. So covering your risk becomes, well, it's always priority number one, but now it's really important to watch that. I think that's enough for the SPX. We're going to look at the 30-minute. We're going to look at the weeklies and the futures market, NASDAQ. When we all put it together, you'll see the pattern that's forming. And I think that's where the key is. You want to, the sort of the helicopter view of the different indices, how prices managed to work through these levels, through the highs last week. I think it's the important thing to sort of take in. So you have that in the back of your mind for the rest of the week. All right, let's move on to the weekly. let's do daily, weekly. I think it's better. So here's a weekly cash, and
Look at that hit.
yeah, that's a very clean hit. So we've
Hmm.
been talking about that. I mean, if you guys are regulars, and most of you are, after we hit the 7/8, and then we start straddling it. Of course, I was always on the 7,000, and in this case, it was right around 7,000, 70.10. So we're waiting to see if we're going to tap it, if we're going to settle above it. And eventually, last week, we were able to tap it and potentially a false break. We have to see, right? So for the weekly, obviously, we have to take out the weekly low in order for anything to settle up. And we had a kind of a false break here, but this is one bar after another. If there's a little bit of a space, it's better. Like what we had here, you can see we had a high, and well, original high was here, had a false breaky high, and we had a couple of weeks down, came right back up, another false break, which gave us sort of a three drives and a false break. And you can see the hard reverse. You can see the week that it actually broke. We came up to tap the square line, right there with the middle of that red circle, and then we dropped. So you want to watch all the price action, and so my point there was this is 3 weeks apart. This high and the false break came in 3 weeks apart, and then we dropped. So here we're 2 weeks apart, close enough, and you want to watch the low here, weekly low, and that's pretty much it. I don't know if you want to add anything to that, Ben. It's
Just
fairly simple
again,
at this point, right?
just again, looking at the pattern from last year around this time to the current pattern, it's so similar.
Yeah,
It's
that's the
crazy.
thing, that's what makes me nervous when it's that similar.
Right.
Sometimes you get the rug pulled in the other direction.
Right. What
And,
curveball are they going to throw at us?
yeah, yeah, exactly. Otherwise, yeah, it's so similar. It's ridiculous. So,
Yeah.
well, the way we know is we have our Gann line. We have the square line. So long as we're below 7,000, we have to be very tactical. And once we get up above 7,000, I think I'd say we can be more strategic, right, in trading that next leg. Which, I think we talked about this earlier. If we clear that 7,500, it's not at least 73. 73, 75 is where the next really hard stop. See 73.70. So 7,400, let's say 74, 75.
It's not unrealistic, that's for sure.
No, it's not unrealistic. I think it's very realistic. And that would set us up nicely in a lot of other ways. And let's move on. Let's look at the futures contract. And if you guys like our work, this is a great time to remind you to hit the likes, reminders, and subscribe. We got a lot of subscribers last week, so that's great. All right, let's move on to this is the other chart that I really wanted to look at, and this is coming off the October 22 low. As you can see, one of the things that happened back in early January, we had a cycle high come in. It was a couple of days off, but it came in at the right place and also tapped price here. And once it did that, it really looked like, okay, we went up. We have a potential false break, not super clean. Nonetheless, we hit the price and we were looking for some kind of a little counter trend. We got a little one. Of course, it was only like one day down. Next day we reversed. At that point, I remember either there or near the 14th or so, or that Friday when we were talking about the setup, I remember Ben saying, hey, wouldn't it be funny if we come up and hit the square exactly? And I remember saying, well, yeah, that would be interesting. Thinking that high should be it. We should get a lower high and then we should probably correct. But here we go, Ben. What do you think of that? Came up
Oh,
and,
it's
perfect,
amazing.
perfect, right?
Amazing. Yeah.
That's 6 squares out. That's pretty good. I think we have to really watch it. So again, the idea is not just to look at one chart from one low and talk about that, try to trade it. We want to look at it, look at different charts from different highs and lows that have traction, that the cycles have traction. And this is one of them. And the price and time came in. So this is another reason to back up the cash chart, right? Okay, now we want to really watch this, watch the counter trends coming into this, and watch the Friday's low, because we have a square out. It's like a Gann's wet dream, right? We have a square, we have a false break, and then we have a inside bar. It's a lot. There's a lot going on. So watch that for next week. And this is the continuation calendar chart, not much to say other than we haven't settled above the 270. Trying, and while trying on the level, getting a false break is normally not a good sign. So we'll continue to watch that. The idea
The
is still the
sellers are
same.
definitely there around that 7,000 area, no
Yeah,
question.
yeah, they're in here. I mean, buyers that keeps pushing up, but sellers are also in there.
Hmm.
So this is why traders have to be very careful in here since we're on both sides. All right. Moving on to the Dow futures. We had that triangle that was building up. 49,484 was the level we needed to get above. We didn't. We slid lower, but not drastically, right? We're holding pretty well. But long as we're above 48,337, this would be the quarter level on this square. The Dow's in pretty good shape. So, want to watch that on the longer term. So between these two, it's possible that we consolidate, but till pick a side, either get above the upper band or the lower quarter. I don't have a lot to say. Obviously you can be on the short side till we get here. And if we get here and we reverse, we can be buying it. But for now, it's being very, very cute about all this. But the triangle did break to the downside, and this 49,484 is big time resistance. Keep that in mind. We're going to jump to the weekly in 1 second. Take a quick look at the NASDAQ, which, Ben, you're going to cover that. Here we
Yep.
have a perfectly sideways, but we still have this higher highs and the higher lows business happening. And this 25,955, it's a line we drew a couple of weeks back saying, either we get to settle above that. We haven't, we tried to break. So what do we see here? We tried to break and failed, right? I would call that a fail. If we try to break and move higher, come back for a retest above this, let's say 26,000, that's bullish, right? You can always try to pick it off coming off of that retest. But here it's, we're still kind of caught in the same churn. Now I'm about to give up on this triangle because if we start to continue to be between, let's say 25,600 and this 25,140, we're probably just going to continue to go sideways. That's the problem here. But we have a couple of levels to watch, the 25,955 and 25,140. Watch these two. If we get down here again, it's going to be interesting because we're going to be watching those counter trends, see if they pan out and we go lower. But this is really this 25,140 is really the level to watch. I think if anybody's going to give it up, it'll be at that level. Up until then, we haven't quite hit the high note either. So it's even though a lot of flags are going off, not much to show here. I'm just saying, because we are right back in the mix. If you take back the close on Friday, we're pretty much where November closes were. But we haven't done much. This is why I'm talking about a possible distribution kind of a pattern, which
Sure looks like it, doesn't it?
right. I mean, you got to keep an eye on these things, not just
Hmm.
look at the next two bars. So overall, I'm a little suspicious if I'm talking about it too much. It's just important because if this starts going sideways and lower, we kind of know what happened. That means will be a much bigger correction or might end up becoming a big bear market.
Right. It
For
means the
all I
boys
know.
found their bag holders if it rolls over.
Absolutely.
And they
Speaking of
and they
bag, huh? Go ahead.
and I was going to say they distributed for months. They
Yeah,
distributed
yeah,
for
yeah, yeah.
months, starting in November, you
Absolutely.
could say.
Well, this is where this pattern, from last year comes into play. We were
Hmm.
going for a couple of months here, sideways, 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 and then somebody pulled the plug. So
Hmm.
here we're sideways, sideways, and back here in 25 after that first pullback, we did a couple of legs down, and after that we were making higher lows, right? Higher lows started to make higher highs, and then it started to go. They went down. So we're basically reading the charts here, guys. Not to get too nitty gritty, but you want to be able to look at it this way. Otherwise, it's easy to go crazy. Anyway, I think that's enough. You want to add anything to that? Well, you're going to cover NASDAQ weekly, monthly charts, so that ought to be good.
Yeah, we'll get a
There's
good
some
looks
stuff
there.
there. All right, let's jump to the weeklies. Take a look at the weekly continuation chart. So here, I started doing this about a month ago, I think. And I guess my point was, I said, look, as long as the chart's working, we're going to follow this. And so far, the chart's working. Not only that, we got 45 weeks coming up, and if we tap into that, that's a pretty good square. 135 by 45. So we're kind of getting pushed right into that. Circle still holding the geometry line. The line is still holding. Everything's holding, and what really has to happen is we have to settle above that. Here's another reason why we need to settle above. You can see the geometry here. We got 3 points, 4 or 5 points now. And for it to really get going, we need to hold above the 7,007 level. I think this is the only chart we would have to cover this week.
Yeah, what week is your 45 there? What's the timing on that?
End of February. Well, February 21st.
Yeah, I mean, there's a lot going into mid-February.
Well, if you go plus or minus 1 bar,
Yeah,
at the 14th,
yep.
that week.
Second to third week of February, there's a lot of timing coming in there, so that we got
And
to
I have
watch
some
that.
yeah, I have some timing coming in. I mean, if we go lower, um, early part of the second week or late part of the first week could be a good place for, find that first low, right?
True.
So if we go lower, but if we manage here and stay higher, well, it definitely push into that 21st.
Mm-hmm. Mm-hmm.
But watch this, copy these levels down. This is the weekly chart, really important. And if you draw, I don't want to add a bunch of lines, but if you draw the trend line from the obvious low to low, even the weekly came up and kissed that line. So are we talking both sides of our mouth? No, not really, because the basic resistance is always there. And like when I say until we get on top of it, it's always there. So there's not much to do here other than to look to see what signals the market's going to send us, what signals, what setups you get on your systems to the short side. Those are worthwhile being taken, long as we're below this level.
I mean, that's the key, right? As long as we're below the level, the odds favor the shorts. That's the key.
That's the key. That's the key. And you ought to take. I mean, you can obviously take them, knowing the probabilities to the downside. Now here is a 30-minute chart, and this will show you sort of why you want to be. I mean, if you look at the last, here's the whole entire chart from January 8th. And if you look at it, you can see, it was being battered both ways. Very hard corrections on both sides, basis of 30-minute. And you have to be quick. So if you guys are trading short term, follow us on X. We both post daily stuff. We post a fuse line that is, we don't even cover it here because we just don't have the time and it's very short term, but it's working amazingly every day as a trigger point for the daily trend. Anyway, looking at this, you can see why we have to be careful on both sides. Looking at last week, let's cover this. Sunday night was fun. We got the break. We were talking about the week before. And then we got above 69.44, which was the key level we left off with, right? So 69.44, and again, it ended up becoming a key level this Friday. So last Friday, if this was really weak, we're going down. This should have been it. We should have gone down. Sure, come back to retest, and that should have failed, but it didn't. We took that out. We took out the trend line, so we settle above it, right? At this point, then we held the 69.72, pushed higher, held the 69.92. Little triangle broke to the upside above 70.16, which was pretty major resistance, and this little triangle is all it took. We broke upside, then 70.34. This zone was major resistance on the short-term charts, lower high. We started to sell off. On that big down, we found support in the zone that I had marked off, the 69.72. Moved higher, went back up to retest 70.34. We failed. And from there, when we started getting a lower high and a reversal, this is the counter trend lower high we look for, right? High, lower high, then we get a lower high here, right on top of 70.16, which is a key level support, resistant level, now support. If that gives out, we're going to go. So which is exactly what I said on the 29th, and gave out. And of course, I didn't expect that. Went through everything and found support right around the 6908 or the 6900 level, which are the two numbers we have on the board here. And it's not so much a level. We basically came down to about 50% level and reversed, got back above 6944. Started making lower highs again, flipped. At this point, we started getting into a triangle, tapped 6992. So this is like wild rodeo style, all this. Not much to do, but it's all sitting around this 6944. Not much to do other than if you took the short trades, well, you had A, B, C, D here terminating 6992, worked out, gave us back down into the other lows. And you got to keep taking those if your system is giving those setups, because we know one of these days we're going to get a kind of a bigger whoosh than this. And I think the profits, if the sell side, you can make a lot faster money than the buy side, usually. Last few days, I don't know, like watching these days, but normally that's the case. I remember checking some trades a while back for a whole year, and 80% of the money was made out of 20% of the shorts. That's how fast it is, how good it is. I suppose it depends on the system.
When they go, boy.
Exactly. All right. I think that's what I have. Oh, let me see. What else do I have here? Might as well cover this. This is a little Gartley I found in the 4 hour. I started posting it before when we were right around here. And sure enough, we got to the perfect Gartley target. So the high came in exactly at the target. And we have a resistant line here, the lower line. And, we really couldn't settle above it, came back. And this was a lower high. We pushed, really couldn't do it. And we failed. So now we're really below that. So you can see where we're hanging here. And if we start to go lower, we take out this trend line. It can get dirty fairly quickly, especially if this keeps following the circle resistance. And that's it, just to keep an eye on it. I mean, here we hit the target. So Gartley is, upside is done. The downside set up perfectly with the lower high, took out the low here. And we had some follow through. But the key now is to see, it's a sort of a whole thing is a false move or not. But here's the evidence. So if we start breaking these lows and getting those reversals that we talked about, now we have some evidence as to why. Anything you want to add, Ben?
I always love the geometry that shows up on those circles. That's really cool.
Mm-hmm.
That's a cool
And this
chart.
high came in, if you can, I don't know if you guys can see the blue and red lines. So this is AC, low to low. So low to high was there exactly, right? One cycle out.
Mhm.
And then B to C, we had two cycles, 1, 2. So they both came together right there, 1 bar apart. So a lot of things were there. Even price and time for Gartley was there. And this is good enough, I would say, for 4 hour Gartley to give. This is good enough. Can't milk it too much more, but who knows? We'll see. Things we keep an eye on, right? All right, let's move on. Let's move on to bonds. Not a lot to say for now, other than we're not really taking out the resistance at 116.5. We try to get up there, came lower, so now we're between that swing. So we're kind of going sideways. Basically weak, long as we're below the 116.5. So keep an eye on that. That's the thing to watch. Looking at the weekly bonds, week before we came up and tapped the support at 114. Didn't make a huge headway. As a matter of fact, we got sold off a little bit. So we're still sort of messing around here. It's possible if we take out these lows, the next big stop is really down where this ABCD is, this 106, 107 level. So just keep that in mind. And all that could happen in a hurry. You guys know the levels now. Crude started doing pretty well. We were watching last week. We were talking about how it came back and sat on top of the line, and this is structural support. And we were waiting for the market to get above 61, our big marker we've been talking about forever. So we picked it before. Now this time we came up above and managed to trade above. So that trade was pretty good. Now, if we clear 65, boy, that opens things up and now we're back in business. So I'm expecting, we might have a little bit of a correction. As long as any counter trends hold above 61, I think crude's in pretty good shape. Obviously, above 65 and counter trends would be the better setup, but it looks like we're off the block.
Yeah, and we'll take a look. I'll take a quick look at the monthly circle chart that, it's showing, hey, we got outside that circle and we're ready to go and it's starting to move. So I think
Yep.
people want to
Yep.
see that.
hmm And we've been very patient all this time waiting. We didn't sell this. So let's see. It looks like we're off to the races, but watch these levels. You can see how effective they've been. All right, let's move on to the weekly chart. Take a quick look. So here we're looking at it from two sides. This is from the highs back in 22. We held the 72-degree line support, and this is part of the reason why we've been waiting for it to finish bottoming here, which took a whole entire year. So we're starting to move higher. Obviously, there are big trend lines and weekly things we need to take out to really establish a trend, but it's a little start. And if you go for the coming off the low back in 2020, this has been the resistance. We've been on the bottom side of it. So 66, 50 or so is where that is. And you can see the trend lines. So normally to break that, we might need to consolidate a little bit before we go, or we gap and go like we normally do when we get to these levels. Whichever way, now we know we're kind of we're into the part where the oil markets are primed because of that price level we saw in the daily. Outside of the charts is another story, whatever it triggers them, but these are the levels we're watching where the markets start building up some momentum. All right, moving on to gold. Well, the metal markets got served
What a market, man.
pork
What a
chops
market.
last week. It wasn't steak. So when you said bag holders, I was thinking of pork chops, like,
Yeah,
okay.
yeah.
So, well, here we go, guys. I don't even know what to say. Other than coming up into here, I remember Ben saying, we were talking about taking profits last week, and Ben said, the thing is, you got to take some profits here. You might be wrong, but you got to do it anyway. You remember that, Ben?
Yeah, absolutely.
And for the last 2 weeks, that's what we've been saying. It's time to start peeling some off if you've been
And
long for a while.
and
Yeah,
and Barry, truth be told, that was self-talk, man. I was talking myself into it, because
absolutely.
it's what you have to do. You're
Yeah, yeah,
thinking, oh, it's going to the moon. I don't want to sell, but things don't last going to the moon.
yeah.
So you sell some and you're going to be wrong. It's going higher, but that's okay.
And sometimes moon's closer than you imagine. So
Exactly.
anyway, we hit some key levels, so that's the whole point here. 50, 55.94. We had a 50% level. Obviously, I need to probably from now on change some of these scales. Here we have 54.14. So what do we make of all this? Well, it was in the making, and some of the squares are there on the weekly. Silver, we had a square coming up, and we actually talked about it last week. And when you start to go vertical, you really have to be careful. And this is why the last couple of times we kept talking about how difficult it is to take profits when every day we're up. So it becomes sort of it's your luck, when you're either your system or intuition, or you can use these support level resistant levels as markers to help you, but everybody's kind of on their own. So we have that this little bit of a down move. Let's look at where support might be. 46.93 area is very good. The
Mhm.
next big level is this 43.30, 45.10. You can watch all of these levels, but we'll go to the weekly, and I think it'll be a lot better view
Yeah.
of what.
Anecdotally, Barry, I'll share this. I
Mhm.
trade some physical as well,
Mhm.
and the dealers last week were not buying.
Well, there you go.
They
Yeah.
refused to buy last week.
Mhm.
And I thought that was really interesting. I said, how is that you're making a market? You're supposed to make a market. Why are you guys just not buying? They said the refineries aren't buying from us.
Ah, okay. Well, that's good to know.
It's interesting, isn't it?
Yeah, very interesting. And it all happens very quickly, swiftly. You can see now if you look at if you combine the whole thing, we have really good support at 43.30 and 39.69 was the big takeoff point for this leg. So 43.30, 46.02, we have 45.10. Any of these key levels can be support, but these things don't really drop and go straight down for the rest of time. So, we're going to get another blow up into this. Normally these things, we'll have a couple of spike highs before we completely reverse. So watch these levels to help with your system, to frame things.
To ride the buck and bronco.
Right, the Barranco. That's right. That's right. So here's I wanted to compress this. This is from 2016 low. This is where I've been watching is the square 52, very important square. Now you might say, well, the daily, we can go everywhere, but weekly, not so much. We hit a really important level. This 572 degrees up, 56.40, 56.39 is the level. This weekly, I could be off a little bit.
Barry, change it to 104 and your squares will fill in.
Yeah, I could do that. But I was gonna zoom this in as soon as I finish, so then I gotta change it again. But yeah, let me do that. There we go, easy enough. So this, when I do 104, this becomes a 52 line. So this is a full weekly square up here. We tagged that, went through the next one. So two squares we corrected, which is just unbelievable for 1 week of silver when it took practically a year, 1 year to get through one of these before. So something's definitely cooking. Anyway, based on the weekly chart, I just want to give you guys some perspective. This 43.92 is a really important level. So 43.92 is really important. I would say that's the key level to watch. And to the upside, we have 52.32. So 52.32 becomes resistance now. And if we can't really settle above that, then we're in some kind of we're in a bigger correction after this big move. So it's really between this 52.32 and this 52 to 32 and say 43.93. All right, there we go. Those are the two levels to watch. Obviously, if we can settle above or below 50%, that's a whole nother flavor. So that's 48.08. So watch those three numbers. That's for the long term. This is for the weekly. And well, we'll take it from there. So what's the big takeaway here is that we hit some key resistance levels. And there are also time levels that we hit. I just don't have the time to go through all of them. But in the silver weekly, you'll see that. So here's silver daily chart. You can see we ran up into really the level was here. The rest is just kind of fraught. The 116, let's say 117 was resistance. I was going to say long as we're below that, but we're way below that. So I think the level to really watch is the 89 level, 90. Remember the $90 silver we talked about? So watch the 90 to the upside. If we're below that, obviously silver is going to be weak. Below 98, another important level to watch. As for support, well, 53.60. Let me see if that's true. Yeah, 53.60 is the key level down here. Next level above that would be 72. So $72. I have to rattle off a lot of numbers because look at we covered about 3 years worth of silver, 5 years worth of silver prices in 1 week. So it sounds ridiculous.
And $72 silver is still amazing.
Yeah, that's no joke.
Right. Right.
But this is what happens when things get out of hand, right? We just go vertical. And 2 weeks ago, we started talking about, how to take profits when the markets are vertical. And if you don't, this is kind of what you give up. So it's always good to watch that these patterns can show up. A couple of people asked, is this the kind of a time to buy silver? Is it the dip to buy? And it might be, for traders tactically. But if you're trading long term, I think we can have better lows coming up. But we'll see. We'll see how things go. But this is definitely hot now. I don't think we're going to go back to the old days of, silver in the 20s. I think those are gone. So really, what matters now is where do we establish the new low? That's the big deal. So 72 is a very good level, and this 53, $54 is the next good level. So somewhere between 54 and 72 where it should come in. So we'll see how that works out. But if you would have asked me, I wouldn't have guessed that kind of a week for metals, man. It's unbelievable.
And on the weekly of silver, we did an outside reversal down bar.
Yeah, right here. Exactly.
Hmm.
So here, this is from the 2020 low, silver squared out. We were talking about this last week. 180 up from that low. And so we squared out. And I was saying, look, we have a potential square here. We could be off by a week, but watch that. And plus or minus, 1 bar. So that was at 102. So the high, we went up to 120. Now 120 is the next level. That's 216 up on the square of 72. And that's, 1 bar off. So it still counts. So instead of this square, we squared up here, 1 square higher. And there you go. And then we reverse. So when these levels hit, that's kind of what happens. We reach out to them. So here, silver had price and time. So I'm thinking, this is a fairly good square. Obviously, it was looking at the sort of the sell-off that came off of it. But what to do? I wasn't really thinking of 120 in a couple of days, So anyway, that's that. But the square, we had the square, we had time here, and if we go up one more square, that's exactly where I squared up. So that's for silver. And let me do copper too, and then we'll cover both metals together. And speaking of metals hitting the exact levels, we talked about how long this is above 535. We're bullish above 593. Market strong. We went right up into the next square in copper, and that was at 650. 650 was a high. We pulled right back half a square below 593 by 1 cent. 592 was the close. Pretty big deal. Is this all over? I don't think so. We ran up 2 squares. I think it's time for a good breather. If we get down to 535 area, that's a 50% correction. Still very bullish, actually very bullish. So
Yeah.
long as it's about, yeah, right. So long as it's
Hmm.
about 535, I think copper's still hot.
There's that 3 drives. So maybe that gives
From
us
here,
the, yeah,
1, 2, 3, yeah,
yeah,
yeah.
gives us
We
a
do have 3
sideways,
drives, yeah, yeah.
maybe we sideways correct above 535 to burn off some time in the cycle and then go again.
Yeah, that would be very bullish, man. That would be a good time to, yeah, that would be good.
Hmm. Hmm.
But here we did come up and hit all in one week. Amazing. What a week for metals. Did you find any? We should see if there are any planetary crazy things that happened.
I mean, we had a decade of movement in a week.
Yeah, like, did any astrologers get this? I'm just asking.
Question, I don't know. I
Like,
don't
this is
know.
the kind of thing that should be nailed, right?
Hmm.
If they're on top of it. Not knocking it, I'm just asking. All right, copper daily. We ran up to 3/4 of the next square and we reversed. So basis the daily, I think we really want to be above this 588. Earlier, it was the weekly chart. 588 is the key level to hold above. Otherwise, we definitely have that correction coming and probably going to go sideways below that. We talked about silver. All right, that's it for the metals. Let's move on to Bitcoin.
A lot of teeth gnashing there.
Also got hammered.
Yep.
Yep. So what's the story here? So I'm trying to, I think, a couple of people said that the white part of the screen is too white to make it a little bit less. So I'm using this color. If this works for you guys, let me know. I'll switch all the charts to this color. Okay, this is kind of a practice screen for now. Bitcoin, well, this came up as a good low back in November. We called that out. Expected the market to go higher. We did ABCD up to 97.90, which was resistance. And we had this resistance line coming down, angle coming down. And the key was, we're going to go higher. We have to break through this at some point. So that's to keep an eye in the background, right? And the second one we talked about a couple of weeks ago was in order for this to hold any upside momentum, we need to hold above this 92,080. So 92.80, we should hold above. And then we slipped right under it. And then I had a Gann line here. I said, well, if we don't hold this, then we're definitely going to go test the circle. And failing that, we're going to go back and test the zone. So 92.80, I mean, we couldn't even get back near that range. We basically was very weak, and the line really couldn't hold it. You can see the first line. We failed and we sold off. Now back at 83, back in the zone. So this zone is still game. So we have 79, 9, let's say 80,000 here is the low, is the bottom of the zone, 83. So we have a $3,000 zone here. If this low is still good, we'll make a higher low or false break and move higher. But boy, Ben, if we mess up here, then I don't know. I think Bitcoin might have a lot more to go. This is a really, really important level. I think it's also important on your charts, but we'll talk about it when you cover it. But basically, we ought to hold this as a higher low or a false break and then reverse right off this 80,000 level. If we fail this, if let's say we get down here, we can't get above 83 and somehow start to fail, we're in bad shape. And long as we're below this line, this very steep angle, obviously we can just waterfall. We had a big down move here, another one here. We can continue to have them long as we're below this. Not that getting above it is any big savings, but this adds to it, that's for sure. Anything you want to add? Well, you're going to cover Bitcoin, right, Ben? So we'll look at it then.
We'll look at the weekly, monthly, daily.
All right, very good. Let's take a quick look at the dollar. Dollar got hammered. Well, we got to 99.50, and the point then was, well, let's see if we can make a lower high because I've been so bullish, right? Let's see, make it lower high above this 97, 78, 80 level. Well, we couldn't. We didn't make a lower high. We sold off. Then the next point was, well, let's go see if this 97 and the 50% level holds, right? That's the next thing. Otherwise, what you'd get is, I think I mentioned this, we're going to go out and do a flush, flush all these lows out and then reverse.
I was going to say, yeah, I think your call is still on track because that looks like a false break flush.
So far, it looks like it. We turned it right in a hurry. So now the key thing is, okay, if that's a false break, great. Let's hold above the 50% level at least. That's 96.65. So 96.65, 96.70, we ought to hold above this on any kind of pullback, and then we can have another run at 99.50. But this really looks like a washout. I mean, you guys can tell. I've been trading for a while. Look at this. This is the kind of a sideways and then a false break. Then we reverse, right? That's when we take care of everything. So this is better this is typical currency. So this is okay. But now we want to make sure we can hold about the 50% level, still playing by the rules. All right, let's take a quick look at the euro, and then we'll go back and do both charts, weekly charts. So euro pretty much did the same thing. We had resistance at this 180 level, 1940, broke above
Sure looks
it.
sure looks like a failure at 180, doesn't it?
Totally. What happened was we went to the quarter level, price and time, we squared out roughly, right? And we did make a false break above this because as soon as we did that, the next bar was down and then straddled and the debt down again. All right, so now this could go on for a little longer, but let's see. So 1792 is the support level now. That's the 3/4 levels from the next square under us. So watch that level, 1792, and the 180 to bracket this would be 1940, let's say 1941. Well, if we can settle above it, fine. Let's just go higher and see what we can do. But if we can't get above it, then the false break scenario, all that holds together, then we're looking for it to be weaker below that level, and obviously weaker yet below the 1792 level. That's my take. But this is support for now, so we got to be careful here. Now we might go back up to make a lower high before selling off. So got to watch for that. Let's take a quick look at the weekly dollar. The cool thing is, if you guys remember, if you can go back and look at this chart, the 95.50, I've had it on the charts forever. And I drew this pink block. I don't know. I think I drew it when these lows were coming in. So this was sort of the catch level if we failed the square here. I think that's when I put the 95 on back in July or whatever. Maybe even I had it before that. But anyway, what do you know? We even had this ABCD that lined up perfectly with the 144. It would have been so beautiful, right? Everything would have been perfect. But nope, we went up and pushed it, flushed everything out, and we have sort of three drives to a bottom. Basis the weekly. You draw a line
And the close is above the 144, which is
over here.
amazing. I mean, look at that. Look at the bar,
Yeah,
the weekly
yeah.
bar.
Which signals a good flush. You know,
Yeah,
that's
that's
what
a
a good
flush.
flush, yeah, a
Yep.
flush should look like. And we got that. And the last time we got a good flush was the false break over here, which was this bar. And you can see we got that there also, a good, big wick on the candle. So let's see if
A
we can
weekly
hold up.
reversal this week would be huge.
Yes. And now, of course, the weekly has to settle above this 144 and do the whole game all over again. But the good thing
Hmm.
is, it looks like we've flushed everything out based on the daily and the weekly. And look at this. This is why it's so cool, right? You think you got all these position tools and everything's great, and then something comes and fucks it up. just just to just to prove a point. So here we had this big ABCD that finished perfectly. We had the lower
Hmm.
highs coming in, and everything looks beautiful. And you think, wow, that ought to be it. But this is why, when we say watch both sides of the street before you cross, this is the kind of
Hmm.
shenanigans that can happen at
Absolutely.
critical levels, right? You always want to shake the trees. Anyway, so this looks like a false break over the high, but we need another week. If next week is down, obviously that confirms all of that. On the second thing is if we settle above this old high, if we settle above the high in September of 2020, September 21st of last year, then this is bullish, right? Then we can go to 23.65, 62, way up here, proving to people that dollar is dead or at least weak. So that could happen. But for that to happen, we have to settle above this old high, and we haven't done that yet. So far, it really looks like a false break, and we're going to head lower. But I'm just watching both sides, right? What happens if we take out an ABCD high or low, ABCD target level? Well, chances are it's going to move very strong in the other direction. Now, if we have a false break at one of these same levels, well, then it'll reverse and go the other way. So that's what we have to deal with. We don't have a trend established the downside by any means. We're looking because this highs really hasn't been resolved yet. And that was, back last year in September. So that hasn't been resolved. And this might have resolved it through the false break. That's the point with the currencies, right? And the dollar to the downside. That the other thing is that it hit exactly on our support level. And anywhere in that zone would have been good, but we came right to the level. So it's holding together. Let's see. It definitely didn't hold out here, which was the easy. That would have been the easy thing to do. Get this ABCD, hold above the line. But currencies aren't easy. Anyway, we
Look,
have to level. We have to level it. And we have to level. Let's see what happens. You guys have all that now. Take a quick look at natural gas. All I can say is we're making higher lows. So there you go. And if we can settle above 440, I think we might be starting to establish a new higher level for natural gas, which is not necessarily good news for inflation, but what happens. Hang Seng did extremely well. We held about 26,230, so the whole point there was above that. We're in a strong place. Then we got above the quarter level and reversed. Didn't quite get to the target, which was 28,560. So basically now we have a lot of structure here. Sure, we can get back down into 26.7 and still be okay. So we're doing okay. The trend is holding together. We're making new highs. Would this be a false break? Well, it kind of went a little too high for a false break, but let's watch it, see how we do. But this base is pretty good. So there's that. And brings us back to the S&P. I think I'm done.
fantastic.
Yeah, it was a lot to cover, man. I didn't want to take all that time, but what to
It was
do?
a big week. Big
It was a
week.
big week, right? Yeah, yeah. What to do? All right, here we go. Let's pick it up at the NASDAQ and get rolling. Your level's still in play here. This
It
25,720
is,
never goes
yeah,
away.
it is. We are stuck to it. But what I think the things to look at, we couldn't make a new high, right? So let's call this a double top that we're dealing with now. We had a couple bars above this key level of 25,720 and then immediately reversed. And timing wise, Barry, this is what I was talking about on my X post that I post NQ charts every morning. we had 90 calendar days high to high. We had 48 trading days low to high, and 48 is in that Gann zone of death, like 45 to 49. And
Right,
what I
right.
said
Perfect. It's perfect.
when we got it, I said, now we see if we get a reaction, right? If we get a
Right,
reaction, then we know it's significant. Well, I'd call that a reaction, right? Because
right.
the high is right on both of those numbers.
Yes.
So now this coming week, what are we going to see? We closed below the key level, which is 360 up. So we closed below it. Now let's see, do we get stuck under it? If we stop this crisscrossing that we've been doing since, December, early December. So if we get stuck below, then we could get some work done to the downside.
Hmm.
And it's like you said, there's these higher lows, there's these higher highs, and they kind of can lull you to sleep, you know, when you're not looking at, well, are we actually making any progress? Are we closing
Hmm.
over a key level? And the answer is no.
Yeah.
And we've got timing to boot that kicked in and did get a reaction. So it's looking weaker. So we got to watch. We got to watch to see if we get stuck below 25,720. I want to give you a quick look at the calendar day that we've shown every so often because of this one by one that we were following. Then we broke. It looked like we were going to recapture the one by one early in the week, but nope. By the end of the week, we're still stuck below it. So this looks like a hug and kiss goodbye. It wasn't just a kiss. They gave a little hug here as we stayed above it for a couple
Right.
days.
Looks like the
And
last high, pretty much that
yeah,
one by one, same kind of a pattern.
right there. Yeah.
Yeah.
So here to the downside, 24,975 is what we have to watch. First trip down, we held it, multiple times here. Here we held it. Here we held it. It looks like we're going to test it again, and this time does the ice crack and we actually go through. So we'll see. We were close to 72 calendar days here, low to high. I think it's off by a few days. Yeah, 2, 3 days, but it's in the neighborhood.
Right.
Let's take a look at the weekly. See what that's telling us. What that's telling us is this 25,932 is pretty strong resistance, and we've had difficulty, as you can see, tapping it, pushing above a little bit. We pushed up a little bit more, but still sold off again. This coming week, if we get stuck under it, it'll just add the pressure that's going to be exerted to the downside if we're below that 25,720 on the daily.
And thank God we have these levels. I would
Yeah.
be pulling my hairs what's
Oh,
left.
yeah, it's crazy.
Like,
It would be. And these kind of, they give you a grid and they give you a signpost to evaluate,
mhm.
is it better odds we're going up or better odds we're going down? Here's the monthly. So the monthly bar is done. It's an inside bar. We were trying to, oh, actually, no, we actually had an up bar.
Mhm.
We
Mhm.
we we poked above um this past week, so we were inside before this week. So now we have an up bar. If we reverse this again, is that the thing that's going to open the
It's
floodgates?
like let's muddy the water some more.
Yeah. Yep.
Mhm.
But you can see we closed well inside the
Right.
previous inside bar too. So there were sellers up there. That price definitely attracted sellers. So overall, if you look at the daily and the weekly, we've got pressure to the downside. We know the key levels, and we had this timing that got a reaction. So odds are tilted in my estimation. The odds are tilted down as long as we're below this 25,720, and we could get that whoosh as you were talking about. I forget what market you were talking about, but being stuck below here, we could get that whoosh anytime.
Mhm.
So that's the NQs. Let's go talk about Bitcoin. And we see the critical level that we've been talking about for weeks now since we've been in this pattern is 85 151, and we're starting to print full bars below it,
Yep. Yep.
which is bearish.
Not good.
And no, it means we're, like Barry said, Is it going to be a higher low or a false break or an acceleration to the downside? It's starting to lean more and more like we're gonna get a
Yep.
push down. We're gonna get more of a
Yeah.
push down. And you'll see where when we look at the weekly monthly.
Oh
So
boy.
weekly, here's the key level we were talking about, 89,252. We're still technically straddling it. So the coming week, we got to see if we stay below that. If we stay below that, 70 to this 74 level is going to be the next target. And there's good support there. We have a half square, 50% of the square plus this structural support. So, and some previous lows, on the way up. So that should be a good spot for the bulls to make a stand. And if they don't, then it's going to be back down into the 50s.
Hey, can you drop that ABCD off the high?
Sure.
Just because if that 70 goes, I don't think 70 has to go. If these lows get taken out, like that low and the current low, we could really fly. There we go, right to the
Yeah, right
72,
to the 50.
50,000.
Yep, right to the 50. And that's a realistic number if we lose this area, this 50% of the square. Because remember, as soon as you lose that, the pressure goes to the next level, which here in this case is the full square, and that's it. Looks like 51,985. Let's put that on. That's the view in crypto land, which if we
Hmm.
can't get above these, 85 and change on the daily and 89,252 here on the weekly, the pressure's to the downside. And then this 70,000 area is the next big spot.
Yeah, boy. If we don't recover here, it's going to be hamburgers for everybody.
It's trouble. It's
Yeah.
trouble for sure. Here's your monthly bar. Not a pretty bar if you're a bull. We talked about we tried to push above and it got rejected. Now we're in a position where we're going to print that first full bar below
Mm,
93. And that pushes us to 74. And you can see monthly why that's, pretty important support because that was the
right, right.
previous highs in 24. And then if we lose that, it is down to 56.
Wow. And we have that
Look,
outside reversal against the inside bar. This is a
yes.
bearish. Yeah.
Yep. And look at this trend line holding on for
Mm,
dear life,
mm,
right?
yep. Mm,
So it's not looking great for Bitcoin. The first thing to watch is this 85, 155. If we stay below that for any period of time, the pressure is going to push us down into the low 70s. So that's Bitcoin. From commodity standpoint, today we're going to look at all the grains, wheat, corn, and soybeans. They're all sort of, we've been talking about them intermittently about, bullish setups, and they're all sort of moving in this pattern of bottoming and starting the uptrends. So we want to keep those on the radar. We're going to talk about coffee, and coffee is going to be more of a tactical thing. We have a good square and an ABCD there that are setting up a decent risk reward upside trade. Uh, Although it's in a bigger picture downtrend, what we're going to try and do is we're going to try and play the upside real short term, looking to get the next short setup to take to the downside. And then we'll take a look at crude oil, that monthly circle chart that we've been tracking, because it's really showing you how once we get outside of that arc, things can really get spicy and start moving. So let's start off on the grains. Let's start off with wheat. And as you can see here, if you look at the daily, you're like, well, why are you showing this? This thing is just straight up sideways. It is, but again, there's signal in the noise, right? And we're looking for
hmm.
signal all the time. So we were going sideways. We were making lower lows, right? Then we did a false break low here on a full square.
Yep,
This
yep.
497 level. We did this false break, had a nice reaction up, pulled back. This time we made a higher low, and now
Hmm.
we're turning up again. So if we take out this 570 level, this 560, let's see, what is that high there? Call it 563, 564. We take that out. That gives us another higher high, right? We'll have a high, a higher high as we head up and start going.
Yep, yeah, starting to move.
So this is while it looks like a boring, nothing sideways track, there is some information we're getting out of this price action. And importantly, it's around this full square level of 497. Let's take a look at the weekly. Here's your weekly, and you see the channel that we've been in. And this is kind of, and if you've watched the show for a while, and Barry, who's watched commodities for many years, when you get these sideways moves in commodities, that's where the big moves come out of, right? Because they base and they base and they base and they base, sometimes for years. Before the whole commodity thing started in like 2018, 2019, they were basing for a decade or 13 years or 15 years.
Mhm.
And then you get big moves out of the base. So if you look at this since July, August of 2023, we've been basically going sideways and drifting. And now we're starting to, again, what you saw on the daily, you had a false break at the low, which commodities and the currencies. When you were talking about the euro and the dollar, I was like, boy, that's the signature for a big directional move a lot of times, right? The
Yeah,
start.
yeah. Mm-hmm. Start,
And
yeah.
so we have our false break. We've got a higher low. And look at this. Quietly, it's been four up bars in a row, for a month of up bars on wheat. Weekly basis, 536 key level, right? We poked above it. Now let's see if we can get this week where the low stays, at 536 or higher. Then we'll have cleared this half square and ready to move and see if we can attack these highs up here. It's early, but we try to let you know early.
But I think,
So
it's a good point that you get going through these, because instead of being hypnotized by the metals, it's good to start watching some of these grains that are bottoming out.
sure, where an opportunity is, right?
Mm-hmm.
Here's your monthly, right? You can see this. This has been boring and not very profitable if you were trying to long trade it. But we were so close here, so close on wheat. We almost printed an outside reversal up bar on the monthly. The close was just a little below the high
Mm-hmm.
of the previous month, but we have an outside bar, right? We made a lower low and a higher high this month. And that, again, generally a sign of a turn. The other thing I'll show you a little timing here, Barry. Low to high, we did a 45, right? Taking it from this low over here in this area. If we go high to low, we did 45 months. So it looks like we've completed a cycle here, and the next cycle is beginning. This thing likes to do 45s and 90s. I mean, look at
But
this. Look at
yeah,
this low to
definitely
high.
worth watching that. Yep, yep.
Yep. And so if you take these two 45s, you got a complete cycle here. This like,
Mm-hmm.
a 90. So let's watch that. And the monthly, always is the last to move, but there are clues here. And the clues is we did a big outside bar, almost an outside reversal. We had an up bar, a down bar, and now a reversal bar. So this pattern of, just one up bar, two up bars, and then a series of down bars has changed here. It's kind of shifted.
Right.
So there's a subtle shift going on with the wheat. So that's wheat. Let's go check out the next one. It's corn. On corn, here we got the daily, and you can see corn's a little further along than wheat is,
Mhm.
but we made a low, went up, made a high, pulled back sharply, did a little bit of a higher low here,
Full square moves.
full square moves, and now we've gone up, we're paused at the half square, we've pulled back. Now we want to see, does this low hold? Can we go up and make a higher high? And the key is, can we capture this 446, 50% of the square level, and then open up the higher range of this full square? But the chart, again, you could say, oh, this is sideways, this is boring, but there's clues in here. that things are happening. If we make this higher, if this low holds and we make the higher low and move, then the money's going to be coming into corn again. Let's take a look at the weekly. Weekly, you can see what we did. We did this ABCD down into the low, nice reaction off of it, got on top. This is a perfect example of getting on top of a full square, right? As we were coming down, you see we got stuck under it and it pushed us lower. Here we've got on top. Now we held it, pushed up for a higher high. Now we pull back. We want to stay on top of the square, ideally doing a higher low and then reversing up again. Because we had this big down week, these last 2 weeks have been inside, but in Barry's rule of the inside bar, we took out the high of this previous inside bar last week. So maybe that's going to be the sign that we're going to be moving up this coming week and going forward, moving up more in corn. But the weekly looks really nice. Even with, even if you go back and look at the spike we made on the start of the Ukraine-Russia war, we made a higher low. Here's your low, there's your high,
Yep.
higher low.
Mm-hmm.
Next, the keys to watch weekly basis are 412 on the downside, 517 on the upside. Because if we can put in this higher low and head up and then sit on top of here, then we're off to the races in corn. That's the next big spot. And you can see why. Go back and look at history. High here, rebound high here, lows here,
Mm-hmm.
stalled here on the way up. It's a pretty important spot. Let's take a look at the monthly. There's your monthly. Monthly basis, 463 is our key spot. That's this full square. And if you look back, you can see why.
Mm-hmm.
It's a place of highs and lows, support and resistance in the past. Here's an example of one of those long consolidations, right? That's 7 years trading in that half square.
Yeah. And now we're on top of it.
Mm-hmm. And that's what we're pushing to do, right? We get above 463, then we're fully on top of that whole consolidation. There's timing, that I have in here. Here was sort of a bull market run for 7 years, 90 months. If we did 90 months from here to here, it puts us into early 28. So that's a possibility. Anyway, the corn and wheat are making progress. Corn's ahead of wheat, and corn's behind our next one, which is soybeans. Here, since last August, we've been making a series of higher highs and higher lows. See how someone keeps stepping into this thing, Barry? Look at all these higher lows.
Yeah, absolutely.
And so we made this high. We called that one out late last year. We had a nice pullback, and look where it held where it needed to.
Mm-hmm.
This 1035 was a balance point, and you can see we spent time above it, we spent time below it. Now the next big one here is this 1080, top of this range. We get up on top of that, you can see what we're on top of when we get on top of that range. The bigger consolidation, right?
Mm-hmm.
And then we'll go up and see about attacking 1125. Let's look at the weekly, give you a better picture of that consolidation and where we are. Here on the weekly, 1060 is really important. And the low this past week held. So we've cleared that level now on a weekly basis, right? We cleared it here, came down, crisscrossing it. We cleared it this past week. Now it's time to make headway, right? Getting on top of that level and staying on top of that level this week will help us put the pressure to the upside on this in this weekly chart. That's the weekly. Let's take a look at the monthly. Monthly gives you a similar view. You can see how this thing likes to do these consolidations. 983 on the downside, want to hold that full square. We did have a down month,
Mm-hmm.
but it sets us up. Look where we closed. It sets us up to where we can have a reversal bar on a monthly this month without a
Right.
lot of difficulty.
Right.
Get that, and we're again heading up to 1275. So that's the three grains. Anything you want to add on these three?
Well, they all look like they're ready to do something. We're at key levels. What I kept thinking was, while some markets are at highs, other ones are clearly putting in lows. So you want to watch, that turn. I think that's what we're catching in the grains.
And as you were
And
saying, money may be moving from one commodity to another or one sort of
hmm
market to another.
hmm
And we're picking that up definitely in the grains and the action. Some of the hot money may be leaving the metals.
hmm Yeah, yeah. Want to watch it because this is early stages, but this is where things get cooking.
Absolutely. All right, let's take a look at another one that we've had good success trading this thing last, year, 12, 18 months on this one. It's coffee. And why are we looking at coffee? Well, the story, coffee hasn't been on the show for a while, so I'll give you a quick story. We traded this leg up, we traded this leg down, and this leg coming down. And the reason we traded this, we did a nice ABCD up into a false break, right? That's like a beautiful setup. Well, guess what we have here? We've got an ABCD down completed, squaring out at a full square level with a potential false break. I mean, that's the holy trinity we look for, right? False break, ABCD, full square level or important level like that. So do I think this overall chart looks bullish? No, but do I think tactically we have a really good potential setup here for a long? Yes. Something ended right here. And we know we have a very defined risk reward ratio once we get a reversal here that we can look at that risk reward ratio and say, okay, I've got this much upside, meaning 380 for sure, and possibly, maybe up here into the half, the three-quarter square 400 area is possible on this trade on the upside, knowing that, hey, if we get a close below, whatever low gets put in off of this ABCD, we know that that's where we're wrong and we kill the trade. So this is the view on the daily. I'll show you the view on the weekly, monthly, and you can see why, again, I think this area is really interesting for a tactical long. So here's a real good view of the false break, right? We had a sharp pullback, rallied up, makes a new high, fails. Another sharp pullback, and look where we stopped, right at 50% of the square.
Yeah, pretty
And
good.
if we're, yeah, I mean, it's pretty good, isn't it? Right.
Yeah, yeah, for
And
sure.
so we drop down to the daily. You can even drop down to the 4 hour. If you get a setup where, we get a rally, a pullback that gives you a higher low, again, you've got a beautiful risk reward setup trade with support backing you, geometrically on multiple time frames. So weekly 331 critical, important, the 50% of the square. And that's another reason why we have support for potentially a tactical long here as that ABCD completed. Here's your monthly. Again, set from a different point. This is set from 2001 lows. And look where we closed.
Yeah, pretty good. Pretty good.
Again, it's a tactical trade, so the monthly is not something you're going to be trading off of. If you're doing something tactically, you're going to go down to the lower time frames, but you can see the backstop and support that you have here. And it helps us have the confidence to, hey, maybe we take a shot here. Maybe, if we get a proper setup on the daily or the 4 hour, or if you're even, super aggressive 30-minute, 60-minute, you have a lot of stuff here that can support you on the bigger time frames for a tactical trade. Anything you want to add here on coffee? I know we talked about it briefly on the show.
Well, I think there's enough evidence here to look at the long side. And, if your systems give you long side setups, they're probably going to be higher probability, you
Yeah,
know?
you got a higher probability of success.
Mhm. It's good.
Okay, lastly, let's go look at our monthly crude chart. Remember, Barry, when we were talking about, and for people new to this, I'll just quickly tell you about the circles. The circles are a different geometry than the square, but it is geometry. When you hit the edge of these circles, you often get very fast moves along it, as you can see here and here. The other thing about it is once price gets outside of the circle, you can get and often get a fast move in the opposite direction. So for months, we've been showing this circle because of its, grip on price and sort of accelerating the move down in crude. And then we also were warning once we get outside the edge of this circle, we have to watch for a potential fast move in the opposite direction. And look at the bar we got for the month of January. It's pretty nice.
Yeah. Yeah.
So that can continue. Now we since we're outside of the circle and we're getting the move, now we're more interested in, okay, what's the square geometry telling us? Well, it's telling us 71.59 is the next big spot, right? In addition to this trend line, we're going to be watching 71.59. If we get stuck under it, that's going to be a sort of a wet blanket on the bull case. But if we can get above it and sit on top of it, it opens up 101, over 100 for crude.
Hey, listen,
So it,
$10 is $10 in crude, so still
yeah,
good.
yeah, it's still very good.
Mhm.
So anyway, that's something we'll keep tracking. We won't show it every week, but when there are, events and things that happen in the market that can help you guys understand the circles and potentially use them in your own work, we'll put them up as examples. So that's all I got. Money's moving out of the metals, as Barry showed, for now, and into we're picking up into the grains and potentially into coffee. So and we see crude picking up money as well. So we hope everybody's having a great or had a great first month of 2026. It was incredibly volatile and profitable if you used your setups and you have good tools, because volatility is what we want. We don't want the sideways is death, right? You try trading in that, it's really tough when things are moving and you have the right tools. It's really like you said the other day. If you remember, you posted something like it's nice to be done in the first 15 minutes of the day or half an hour of the day
Yeah.
because the markets are moving, right? It moved enough. It went from resistance to support, and you executed the trade perfectly. And I mean, we're in that kind of environment, and it looks, and I'm interested in your take on this, Barry, as well, that 2026 is going to have a lot, like January, the experience we had in January is probably going to carry through for most of, if not all of 2026.
I think so. That's in all the market across the board,
Hmm.
metals, the energy, we have the indices. So yeah, I think we're gonna have a lot of good trading opportunities. Let's just stay focused on that and always remember to take some profit. Doesn't hurt.
Absolutely. And listen, we appreciate the support. Barry said we're getting a lot of new subscribers on the channel. We really appreciate that. We're glad you guys are finding the work useful, and the more people that join, the more stuff we'll put out. I mean, we talk about doing like different videos and things like that, and the more you guys respond to it and help us grow the channel, the more we'll put out there. So great job, Barry. Rest up this weekend. It's going to be another busy week, and we'll talk to you all next week.
All right, thanks, Ben. We'll see you guys next week. Great job. Talk to you later.
Take care, everybody.
Bye bye.
Bye bye.